The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Today is Friday, August 19th, 2022. I'm Christy Culbreth, the DDA's statewide coordinator of self-directed services. We welcome you to the DDA's Self-Directed Services Lunch and Learn series, the self-directed budget sheet, and modifications. Before we begin, I'd like to go over a few things about the webinar. All participants are in listen-only mode. There are two options to hear the webinar, by computer and by phone. If you look in the panel interface on your right, there's a section labeled audio. You can click on the computer or phone to switch to your best option. We have 3 handouts today, and I understand there's been a couple of issues with them, so we'll make sure we get those emailed out to you after the webinar. We are recording this webinar today. It will be posted on the DDA website and YouTube page. We will have questions at the end, so please put your questions in the chat and questions boxes. Today, I'm joined by Rhonda Workman, the DDA's Director of Federal Programs. She will be facilitating our question and answer portion. Again, thank you for joining the webinar with us today. We're grateful for the opportunity to share this information with you. Our agenda for today includes an FMCS transition review, including a review of the updates of the self-directed budget sheet, a demonstration of the self-directed budget sheet, a demonstration of the budget modification, and we'll have time for questions. As I shared, today the webinar is being recorded so that you can review the information later and so that others who are unable to join us today can have the opportunity to hear the information. As a reminder, Maryland's Financial Management and Counseling Service agencies include GT Independence, Public Partnerships, LLC, and the ARC Central Chesapeake Region. Links to the agency's websites are available on the DDA website and in our resources slide today. It's important to note that every participant who currently self-directs will choose an FMCS in a process called open enrollment. Participants who choose to self-direct in the future, beginning on August 1st, will choose an FMCS agency during the person-centered planning process. Let's review open enrollment. There are 3 steps to open enrollment for people who currently self-direct. The first is to learn as much as they can about each FMCS agency. The second is to choose an FMCS agency. And the third is to take action steps to transition to the new FMCS. Open enrollment for FMCSs began on August 1st, 2022, and will go through November 15th, 2022. If a participant does not choose an FMCS before November 15th, one will be chosen for them. It's important to note that if a person is currently using the ARC Central Chesapeake Region as their FMS, they will still need to choose an FMCS agency during open enrollment. They may choose any of the 3 agencies, including the ARC CCR. Now, let's do our demonstration of the self-directed budget sheet. Great. Instructions for the complete self-directed budget sheet have been created and are posted on the DDA website. First, we'll review the updates made to the budget sheet on July 21st, 2022. Annual implementation and effective date fields have been added. The annual implementation date is the date that the participant's person-centered plan began. The effective date is the date this self-directed budget sheet being created is effective. For initial or annual plans, the annual plan date and effective date are chosen by the participant and their team before services begin. For revised plans, the effective date is the date the DDA approved the revised person-centered plan. For FMCS open enrollment from August 1st to November 15th, 2022, the effective date is the start of the FMCS services. In open enrollment for people currently self-directing, the effective date can either be October 1st, 2022 or January 1st, 2023. When an annual plan date and effective date are included, the self-directed budget sheet automatically calculates the number of months and weeks. Let's see how this works. So when we add the effective date of October 1st, 2022, and an annual plan date of, let's say, July 1st, 2022, you'll see that the budget sheet automatically calculates that there are 9 months left in the plan and 39 weeks left in the plan. A line for the FMCS has also been included in the self-directed budget sheet. Remember, fees for the FMCS must come from the participant's current budget allocation. FMCS will not be a service listed in the detailed service authorization. Let's review how a participant would complete the self-directed budget sheet once they have chosen an FMCS during open enrollment. We'll list the person's name here. Let's call them Jordan Doe. We'll then list from the drop-down menu FMCS open enrollment. We'll then note that Jordan's DDA budget allocation from the detailed service authorization is $120,000. This section of employees and vendors is an optional section, so Jordan chooses not to complete that. And then they'll list that they're in the community supports waiver. Now they'll list their chosen FMCS. From the drop-down menu, they'll choose from GT Independence, Public Partnerships, or the ARC CCR. For this training example, we'll use the FMCS agency. Next, they'll list the rate per month that the FMCS charges. Rates are available on the DDA website, as well as from the individual FMCS agencies. For this example, we'll list $100 per month for simplicity. Now, we'll list the number of months. So we review here at the top of the sheet where it has the number of months calculated as 9. So we'll list 9. You'll see that the budget sheet automatically calculates the $900 there. After the team lists the FMCS and fees, they would complete the rest of the budget sheet by mirroring the most recently approved budget sheet. This means that every line item in the remainder of the budget sheet would be exactly the same as the most recently approved budget. There is no need for prorating. Now, let's do an example of an initial plan and do the entire budget sheet. So I'll clear out some things from this. All right. So this is going to be an example of how the self-directed budget sheet can be completed. A complete instruction guide on how to complete the budget sheet can be found on the DDA website. So we'll list the status of the PCP here. For this example, we'll use initial PCP. We'll note that the effective date for this PCP would be October 1st, 2022, and the annual implementation date would be the same date. You'll see here that the number of months left in the plan is listed as 12, and the number of weeks are listed as 52.143. We list the waiver as well. Next, the participant would then choose their FMCS agency, just like before, and the rate per month that the FMCS charges. Instead here, we want to make sure that all 12 months are calculated. So we put 12 here. And we'll see that the budget automatically calculates 12. For people transitioning from the traditional service model, the months remaining in their plan year should be used. All right. As you develop your budget, you will notice some services require you to list whether you have employees or staff, vendors or contractors, or both. Services that include wages and taxes, like personal supports, we'll go through those now. So let's discuss calculating and determining wage as I come down to personal supports. Participants determine the wage of all their employees. Wages must be between minimum wage and maximum reasonable and customary rates provided by the DDA. At the time of this webinar in August 2022, the minimum wage in Maryland is $12.20 for employers with fewer than 15 employees. Please note that certain counties in Maryland have higher minimum wages. Support brokers and FMCS agencies can provide support to teams to understand the minimum wage in the participant's jurisdiction. The reasonable and customary wages can be found on the DDA website. Participants who wish to pay above the maximum listed must complete an exception form. Wages must not exceed the exception maximum. The best practice in determining a wage for employees is to have a wage scale. A wage scale is a document that shows what rate an employer will pay a potential employee based on their experience, education, or other factors that matter to the employer. Support brokers may support participants in developing objective wage scales for their job descriptions. For this example with Jordan, we'll look at personal supports. Suppose Jordan is authorized in the person-centered plan for 40 hours per week of personal supports. Jordan wants to hire a personal support employee at $22 an hour. We'll list it this way: 40 hours per week at $22 per hour, and we'll list the number of weeks Jordan needs the services, which will be every week of the year, 52.143. You'll see we'll pull that week amount from the budget sheet. When we click enter, we see that the budget sheet automatically calculates it. Because this is an employee, we need to make sure we include taxes as well. So we come down to the employer tax line item listed here. The FMCS provides the employer tax rate that is needed. Those tax rates are available on the DDA website and with the individual's chosen FMCS. For this example, we'll use 14%. So when we add 14% in, we see the budget automatically calculates it. Now, let's review training as a line item. Payment for training and for time employees use training can be paid for this in this line item. Include all trainings that will be paid for in the year per employee. These trainings could include the cost of first aid, CPR, MANT behavior support training, or ACRE job development training, or any other training that the employer requests for employees to complete. You can also include the cost of wages and taxes for each employee to attend their assigned training for the year. So let's do an example together. I'll pull up another screen so that we can see how you might calculate it. All right. For this example in personal supports, Jordan wants their personal support employee to complete first aid and CPR training. They research and find that the cost of the training will be $120. They research and find that the training will take 4 hours. So 4 hours multiplied by $22 per hour for that personal support employee equals $88. Taxes also need to be calculated here. 14% of $88 equals $12.32. This is calculated by multiplying 0.14 times the 88 to get 12.32. So we need to add all of these together. So $120 for the training plus the $88 for the time in the training plus $12.32 in taxes equals $220.32. We'll make sure that we get this number over to the budget sheet. The $220.32 is added as a cost per staff, and Jordan has 1 staff, so we'll list that here. You'll see that it automatically calculates. Please note that participants are not required to pay people they hire or staff time while attending a training. Now, let's discuss benefits. Here's the benefits lines. Here are the benefits lines for personal supports. Best practice for all benefits would be for a participant to have a written policy for each benefit that is clear and fair. Support brokers can provide support to participants in developing these policies. The following options can be considered but are not required unless noted under state or federal law. Benefits must be reasonable and customary. Let's review health benefits. Payment for health insurance can be paid by the Fmcs to the employee's insurance company or reimbursed to the employee. Participants should reach out to their Fmcs for more information about how to pay out health insurance benefits. Health insurance is budgeted by multiplying the amount of health benefit by the number of employees who receive it and the number of months in the year. Let's do an example together. Health benefit. Jordan wants to give their personal support employee $200 per month for a health benefit. So they'll calculate the health benefit to be $200 per month times 1 employee times 12 months of the year, and that equals $2,400. That amount gets added to the budget sheet here. All right, so we have the health benefits line here. We'll add $2,400 here. You'll see it calculates automatically. Now, let's review paid time off, or PTO. Paid time off is paid to employees to take sick, holiday, or vacation time. Using the PTO line item allows another employee or vendor to work the hours budgeted for the person while the employee is on vacation, or on sick leave, or taking a holiday. PTO is calculated by multiplying the number of PTO hours by the rate the employee is paid. So let's do an example together. PTO. Jordan wants to give their personal support employee 2 weeks of paid time off. And the employee works 40 hours per week. So we calculate that by 40 hours a week times 2 weeks times $22 per hour. And that equals $1,760. In the budget sheet, taxes are automatically calculated for PTO. So we just need to bring this number over to the budget sheet. All right, here's the budget line item. So we'll list $1,760 here. And you'll see it automatically calculates the taxes. Sick and safe leave, listed here, is specific to those in Montgomery County. It is calculated in the same way that PTO is in the budget. Support brokers and FMCS agencies can provide support to participants to ensure they are in compliance with local sick and safe laws. Now, let's review mileage reimbursement. Here's the line for mileage reimbursement into the personal support service. Mileage reimbursement can be provided to employees and other support people whose personal vehicle is used to support the participant with a waiver service. Participants may pay up to the standard mileage rate for business travel provided by the IRS. At the time of this recording, in August 2022, the mileage rate is 0.625, or 62.5 cents. Support brokers and FMCS agencies can support the participant to understand current mileage rates. Let's do the example here. Jordan wants to use 100 miles per week in the employee's personal vehicle during their personal support hours. They input 100 miles here. They would like to pay the federal mileage rate, which right now is 0.625. Jordan knows that they can pay lower than this too, but this is the rate that they choose to pay. And they'll list the total number of weeks, 52.143. You see that it automatically calculates there. Personal supports is just one of the services participants can hire employees for. Other services where an employee can be hired are support broker, respite, nursing support, ongoing job supports, and community development services. With all of these services, you may also hire a vendor to work for you. There are also some services that require a use of a vendor. So let's do a couple examples of how a vendor might be calculated in the budget sheet. When vendors are used instead of an employee, taxes do not need to be calculated. Rates for vendors are negotiated between the participant and the vendor. Let's use support broker as an example. You'll see here at the bottom of the support broker listing, there's support broker, vendor, contractor. This is where that would be listed. Jordan's support broker charges $50 per hour. So we'll list that here. Jordan wants to budget 4 hours per month of support brokering services. And they'll list the 12 months of the year. And you'll see that that automatically calculates. Respite provider, day, and camp are also things that don't require taxes or employees. So let's go through those. For a respite license provider, they must be paid by the day at the rate negotiated by the participant and the provider. So we would list the number of days in the detailed service authorization and that rate per hour, or the rate per day that the vendor charges. We'll say 200 here, and it calculates accordingly. For camp, you would list the total cost. So let's find camp. Here it is. You would list the total cost of camp here. So let's say $1,000 for simplicity. For vendor hourly rate, you include the total number of hours and the rate negotiated by the participant. So back up to vendor hourly. Where is it? Oh, it's down here. Vendor contractor hourly. you'd list the number of hours total and then the rate. So that might be $25 per hour. So you'd list that here like that. There are some services that require a vendor to be used. Those services are housing support services, living caregiver, behavior support services, employment services, including discovery milestones and self-employment development service supports, day habilitation, family and participant support training, environmental assessments and environmental modifications and vehicle modifications, assistive technology, individual and family directed goods and services, transition services, and independent transportation, and remote services. These services require the total amount to be listed by each budget line. Let's use individual and family directed goods and services as an example. In this example, Jordan wants to include $100 a month for a gym membership in individual and family directed goods and services. They list the item as gym membership. They calculate the total amount needed for each month. So let's do that math here. Gym membership. 12 months times $100 equals $1,200. So they list $1,200 here in the individual and family directed goods and services. And it calculates. Now, we'll review a demonstration of the COVID-19 Form 5 budget modification that was introduced on April 8th, 2022. Here is that form. Rhonda, can we see that okay?
Yes, we can see it fine. Thank you.
Great. I'll show an example of how to use this form to complete a modification using unallocated funds, and then an example of how to move funds between line items. Using the COVID-5 form for unallocated funds. In this scenario, we'll use Jordan Doe again, so we'll write their name here, and we'll list the date as today, August 19th, 2022. They'll choose their FMCS from the drop-down menu here, and they'll choose their region from the drop-down menu. In this scenario, Jordan has $60,000 in their DDA self-directed budget allocation for their PCP authorized services and has budgeted $48,000 in their self-directed budget sheet. By entering these figures into the form, it automatically calculates to reveal that Jordan has $12,000 in unallocated funds. Now, Jordan goes to a day program for about 8 hours on weekdays. Jordan is informed that their day program has closed for 6 weeks because of a COVID outbreak. Jordan and their team don't want to go without community-based services during this time. So Jordan and their team decide to move funding from unallocated funds to a new line item, community development services. Jordan wants to hire a neighbor to provide these services for $25 per hour. The team meets together to work on a budget modification and does the math calculations together. So we'll do those now. All right. Well, make sure y'all can see it. There we go. 8 hours of community development services from Monday through Friday for 6 weeks equals 240 total hours. 240 hours times the $25 per hour Jordan wants to pay equals $6,000. Jordan and their team need to consider employer taxes at 14% of the $6,000. And that is $840. And they'll add those numbers together. So 6,000 plus 840 equals 6,840. In total, their team will need to move that funding from unallocated funds. So let's go back to the form. The team works together to make sure the total cost in reduced and taken from unallocated funds here, this number equals this number, the total services being increased or added. So they would add the service as unallocated funds, and they'd list the 6840 needed to be moved. And you'll see it automatically drops down that amount here in this blue box. Then the services needed to be added would be community development services wages. They'll list, yes, this is a new service that they're not currently receiving, and they'll add the $6,000 here. Then they'll need to include the $840 under the taxes to make sure they're also calculated. And Jay and their team, Jordan and their team confirm that these two numbers, 6840, match. Jay then signs the form here at the bottom. Jordan signs the form, and they'll send it over to the DDA Self-Directed Regional Office lead because the request is over $5,000. Now, let's do an example of using this form to move funding from line items that already exist. In this scenario, Jordan has been asked to work at another job site for their job. The new job site is 5 miles farther from their home than their old site. Because Jordan's job coach drives them to work Monday through Friday, they need to move funding from another line item to ensure there is enough funding. They know they have additional funding in individual and family directed goods and services that they can move. So let's do the math with Jordan. Five miles. Let's make sure we can all see that. It's a little small. 5 miles extra per day times 2 trips per day, since they go back and forth from work to home, times 5 days per week equals 50 additional miles per week needed. They know that there are 10 weeks left in the year of their plan. So they calculate 50 miles times 10 weeks equals 500 miles. Move this up. $500 miles times the rate that Jordan pays, 6.25, equals $312.50. And that's the amount of funding Jordan needs to move from individual and family directed goods and services to ongoing job supports mileage. So let's go back to the form. All right. Here, Jordan knows that they need to reduce individual and family directed goods and services by the $312.50. You'll see it automatically calculates in the total cost. And they want to increase ongoing job support mileage. This is not a new service. They've already been receiving it. They're just adding additional funds. And they'll put $312.50 here, and you'll see it automatically calculates. For mileage reimbursement, taxes do not need to be calculated, so they aren't added here. And then Jordan signs the form again. They send it directly over to their FMCS since the request is to move funding between line items that already exist. All right, let me go back to our presentation. On this slide, we have all of the resources that should be useful to you, to participants and their teams as they continue to follow the open enrollment process for FMCS or just plan in general for self-direction. So we have a lot of resources here, the budget sheet listed here, all of the instructions for the budget sheet are listed, as well as the guidance that we provided on July 21st, and all of our links for the FMCS resources that are available on our website. Additionally, we have our training calendar available here. We have one additional informational fair for the FMCS transition on Tuesday in Bowie, if you're not already registered. And we'll have additional informational sessions in October, as well as a list of our lunch and learns on our training calendar. So now I'll turn it over to Rhonda to facilitate our questions, and I hope I can answer them for you.
Great. Thank you, Christy. What great information for all of us today. We really appreciate you walking us through the budget sheet and the budget modification form and giving us some examples that we could look at. So we do have a couple questions in the questions, so we'll go through them, and happy to join you with some of the responses. The first question is, how will participants be made aware of the need to select an FMCS if they are not tech savvy? Will phone call updates be made?
That's a great question. So we've sent out letters to every person who self-directs to remind them to discuss the FMCS transition with their CCS. We've also asked for CCSs to reach out to every person they support to discuss the FMCS transition. What we've laid out in our informational sessions, the first of which was recorded, so they're available online to watch. We've laid out the contact information for each FMCS. So if people are not tech savvy and don't want to go into an informational session to meet the FMCS agencies, they can have the support of their CCS, their support broker, or another team member to contact each FMCS to schedule a phone call. That would be my suggestion. Contact those agencies directly, get on a call with them, and discuss how they might meet your financial services needs.
Great, thank you. Our next question is, for FMCS agencies that have a rate increase on July 1st, how do we add this to the budget? We can't add another line item for FMCS to account for the rate increase. Are CCSs supposed to list the entire year at the higher rate to prevent having to complete a revised PCP or budget modification each July?
This is a great question. So the first thing I'd like to say is that going forward with these new FMCS agencies, the supports that they provide include being a member of the team. And so they would be able to support teams, especially CCSs, with tools to be able to account for the fees in the way that makes sense for the team. But I'll give some examples as well. all three of these are perfect options for accommodating a rate change in the middle of a plan year. So the first would be to calculate for the higher rate for the entire year. That might make sense for people who are only counting or need to account for that rate for most of the months in their plan. The second would be to, in that scenario, the participant would have cost savings at the end of the plan year that they could move somewhere else. The team could also consider budgeting for the lower rate for the year and then know that they need to move funding using a budget modification for the rate increase for the number of months where the rate goes up. Or my favorite option would be to calculate the exact amount that a person would need and divide it by the number of months in the plan, and you'll get that very clear rate for exactly how much money you need for your FMCS. But I will say again, FMCS agencies are a part of the team, and they can and should help teams calculate that funding.
Great, thank you, Christy. And I think one of the other things that we could maybe consider is we'll look and further consider adding a second line item for FMCSs so that you could have, you know, a rate for the first part of the year, and then if it crosses over July, you can note the second part of the year. Mm-hmm. So we want to make it as user-friendly and as possible. So we'll look at options like that to try to streamline that. Please note that the in this question it asked if the person would need to complete a revised PCP or budget modification each July. A revised PCP would not be needed for the budget sheet. The budget sheet after the person transitions to the FMCS will go directly to the FMCS and not need to be done with a revised PCP. So the next question or comment we got is that the DDA is receiving a lot of questions from coordinators of community services about the rates, wages not matching the DSA in the budget sheet. So the budget sheet and the detailed service authorization in LTSS rates and wages are not matching. Could you further elaborate on participants who self-direct their option to use reasonable and customary rates and wages, and that they do not have to use the rates that are in LTSS?
Definitely. We want to make sure people who self-direct their services have complete employer authority to pay their employees the wages that make sense for them. We have some parameters to that, like I mentioned. The first would be minimum wage. Employers in Maryland are required to pay a certain minimum wage depending on where they live. So that has to be followed. Additionally, the DDA has outlined some reasonable and customary standards for each service. So there's a higher rate. So participants shouldn't go over the reasonable and customary rate or the exception rate. If they do have an exception, they complete that form. Now, I think this question has to do with perhaps community development one-to-one versus community development 1-to-4. So we have accommodated in community development services, especially to make sure that rates across the service, the reasonable and customary rates across the service, are the same, regardless of what rate is approved in the detailed service authorization. That means that participants can prioritize to pay their employees a higher rate for CDS, but they do have to find that funding from cost savings from the allocation that's been approved. I hope that answers the question.
Yeah, we're starting to get a lot of questions, so let's move to the next one. There was a comment about there may be other ways that the budget sheet could be automated using VLOOKUPs and macros, so thank you for that comment. We will look at trying to make it as simplified as possible, and we know that the FMCSs are looking to automate it too. We've got some questions about paid time off and for staff, and is there a minimum number of hours they need to work before being eligible? So we want to talk about reasonable and customary and our plan to be looking at having guidance related to that for benefits.
Yes, we are working to have some real standards and guidance on what reasonable and customary benefits look like for different employees. For right now, I will say quickly that paid time off is not required for employees to provide at all, except for the exception would be sick and safe leave in jurisdictions that require that. So I do want to acknowledge and maybe speak to the support brokers on the call as well to say that paid time off policies, it's best practice to have them written, and they do need to be fair and equitable across all employees. You want to make sure they're fair so that certain employees aren't receiving more paid time off than others unless there is a clear reason for it. So I would say to the person asking the question, if you haven't discussed that with your support broker, do that. Or support brokers, if you have questions about that, please let me know. We can see if we can provide support.
Yeah, and the DDA will be, the department will issue its standards related to reasonable and customary benefits to include paid time off. The next question is, if the employee uses the client's family vehicle to drive the client, is there a way for the client's family to be reimbursed for the mileage?
Yes. If the vehicle is being used to support the participant in the service that the DDA has approved in the person-centered plan, the owner of the vehicle, the family member, can submit mileage reimbursement for miles.
Great, thank you. Our next question is, what happens when support brokers request additional money through the Form 5 that takes them above the 4 hours allowed on the budget sheet? So Christy, if you could talk about who should be submitting Form 5 if there's a support broker request for additional funding, and what would happen if it goes above the 4 hours allowed on the budget sheet?
Great. So first, the budget modification sheet is very specifically a form that's completed by the participant with the support of their CCS. This is important because we know that support brokers are line items within the budget. So support brokers should not be completing budget modification forms and submitting them. The submission, it can be completed as a team, and the support broker can be involved in completing the form, but the submission should be by the participant or their CCS. So I'll say that first. Secondly, Appendix K, the flexibilities in Appendix K allow for up to 20 hours of support broker services per month. So if that's needed under the Appendix K flexibilities, that can be done.
Great, thank you. Related to Form 5, the question is, there is no need to complete the W numbers, question mark. Do people need the W code numbers anymore?
That's a good question. So, and this is, I apologize, we should have updated the Code 5 form when we updated the budget sheet. So we took the W codes out of the self-directed budget sheet. Those are codes that are used by the FMCS, and we felt that we wanted to simplify the budget sheet as much as possible for participants and their teams. So going forward, W codes are not required for the budget modification form as well.
Thank you. Next question. In order to move funds from unallocated funds to FMCS agency, do we just fill out a budget mod? So if they're going to be doing the FMCS agency, is it budget mod only, or do they also need to do a budget sheet?
So this is really important. So on our webinar on July 21st, we reviewed the process for adding FMCS fees. The process for adding FMCS fees would be to complete the new self-directed budget sheet, not a modification form. So you'd complete the new self-directed budget sheet and include the number of months needed for the end of the plan year for those fees. Then the team would complete the rest of the budget sheet to mirror the most recently approved budget sheet that the team
Thank you.
Yep.
Yep, thank you. And just a reminder, Christy, if you can go back one slide, the DDA has issued guidance that speaks to some of this, so that you could find that on our website. Christy's pointing it to there, right there, under the first item under resources and tools, and we will email the PowerPoint to everybody after the conclusion. Next question. If you're completing a budget modification, do you need to do a plan revision? So budget modifications, do you need to do a plan revision? And maybe Christy talk about the different scenarios, right? That this would apply whether you have already transitioned to an FMCS or you have not.
You're completing a budget modification. So there are scenarios where a plan revision makes the most sense. If you've had a change in need, it would make sense to go ahead and do a plan revision. We're not requiring, you should not do plan revisions for an FMCS transition though. That would be, we've outlined that process pretty clearly. So if you have a new service need, my suggestion would be complete a revised plan if you have the ability. During Appendix K, we have the flexibility to add a new service from unallocated funds or from cost savings using the COVID-5 form. So that also is an option to add a new service until September 30th.
And I would just say that we've added some additional guidance and flexibilities to use budget modifications to move money around, to access more meaningful day services without having to do a revised plan. So it's really important that you refer back to that guidance so that you can look at those options and flexibility. The next question is, please provide an example of moving unallocated funding to pay FMCS fees. Can you talk again about the new budget sheet that has the FMCS fees and where they could use those unallocated funds to pay for those costs?
Yep, I can go through this. I can go over this again. So if you were completing a budget sheet for a person who is in FMCS open enrollment, you would make sure that FMCS open enrollment status is chosen. Then you would list their effective date. So for people who are currently self-directing, that effective date is either October 1st, 2022, or let's say for these purposes, January 1st, 2023. Let's say in this scenario, the annual implementation date is July 1st, 2022. So you'll see that the budget sheet automatically calculates for 6 months of the year. Then you'd go down to FMCS, you'd pull the drop-down menu, and you'd choose the person's chosen FMCS. So that would be GT Independence, Public Partnerships, LLC, or the ARC CCR. Then you'd list the rate per month. I'm not looking at the chart that's available on our website, but I can tell you that the rate per month for GT Independence is $123. So it would look like this. Let me show GT Independence, and we list the 6 months. So it would look like this. If the person chose PPL, the rate is $83 per month. So it would look like this. And the rate for ARC is $200 per month. So it would look like that. The next step would be to complete the budget sheet to mirror the most recent approved budget sheet from the person.
Thank you, Christy. The next question is, moving forward, and I think they mean after the person transitions to the FMCS, so moving forward, The SDS budget sheet will be sent to the FMCS for approval as opposed to the DDA approval within the PCP ? So after someone transitions, where's the SDS budget sheet sent? And could you talk a little bit about the standards for the FMCS to be able to approve that the team can look at before they submit it?
That's a great example. And that's correct. It does. That process will start for people after they do open enrollment. But let's take someone who just is beginning self-direction today. If they are ready to submit their plan, they would work with their CCS and the rest of their team to submit their PCP, including their participant agreement, rights and responsibilities documentation, service implementation plan, and any other documents that support assessed need. Those would all be included in the person-centered plan download in LTSS. And then the regional office would review it, and they'd give you the go-ahead and say that looks great. You're approved for this dollar amount. And then the team would meet. They would create the budget sheet together. It's important to remember that the budget sheet process is a team process. So it will include the CCS, but it can include the participant, their family members, their support broker, and their FMCS agency in the development of the budget sheet. Then the budget sheet would be submitted with the family of staff form and any wage exception forms to the chosen FMCS. Now, the FMCS is reviewing those forms based on the program standards that the DDA has provided them. So those are some of the things that we mentioned today, like reasonable and customary rates. They're going to make sure that employees are not going to be paid over the reasonable and customary rates, and they're going to make sure that employees will be paid at least the minimum wage in the jurisdiction the participant lives in. Additionally, individual and family directed goods and services, they would look through the program standards that we've provided and say the waiver does approve gym membership, so that gym membership looks great. So that's we've given the program standard to the FMCS, and they are ensuring as a part of the team that the budget sheet meets the program standards.
Great, thank you. The next question is, if you have a approved self-directed budget, is the approval implementation date the same as it is currently listed? So an approved self-directed budget, and you're doing the budget sheet, I guess, to add the FMCS, do you use the same approval implementation date?
You could. So the budget sheet effective date is the date you want to begin self-directed services. So yes.
How is an initial budget for an individual determined? How is the person's initial self-directed budget allocation determined?
That's a great question. So when the team meets with their CCS and the rest of the team, they discuss what the person's assessed needs are, what the person needs, how are they going to be supported, and then that gets listed in the person-centered plan with the service implementation plan and any other documents that support that assessed need, and all the services are listed, and rates are applied to those services that are requested, and those rates calculate up to an entire budget allocation. So the budget allocation is what is the entire PCP approval based on the rates that the DDA pays for each service.
Okay, great. And the last question, because I know we're at our hour, when should the CCS stop including the budget in the PCP documents and send it directly to the FMCS?
So the CCS should continue to upload that budget sheet when it's completed into LTSS Maryland. The difference will be that the FMCS can apply it once they have reviewed it to make sure it meets program standards. So it's not a requirement to move forward with the budgeting process or payment process, but we would want to make sure that it does eventually get uploaded to client documents.
Right, and in our information fairs, the virtual fair that's available online, the in-person ones that we've been completing, and in our guidance, we talk about kind of that timing and transition. So once a person transitions to the FMCS, and so for current participants, it'll either be October 1st or January 1st. Until that time, then the budget sheet should be included with the PCP if it's due prior to their chosen effective date. Once a person transitions, then the budget sheet would be uploaded in LTSS as a client attachment. And then we've also shared in our guidance and information fairs that for those people who were working on that planning in July, early August, they should continue that process. They probably have already submitted the budget sheet with the PCP. And then lastly, the last group would be people new to self-direction, like starting right now today. They would not need to include the budget sheet with the PCP submission, but they would need to upload it in the client attachment after the participant, with the support of their team, develops that budget sheet. So Christy, I turn it back over to you. Do any closing remarks and letting us know what our next Lunch and Learn's about.
Great, thank you so much. Our next Lunch and Learn is next Friday. I don't want to tell you incorrectly. So let me pull up my calendar. Next Friday, we are reviewing choice, open enrollment, and information about the FMCS. So we're going to be reviewing choice of the FMCS, open enrollment, and information about FMCSs next week on our Lunch and Learn call. Thank you so much. Right after this, you should receive a survey right after you close the webinar that will list how you felt about the webinar and if you'd like to learn more in these Lunch and Learns. Thanks so much.